Welcome to London Property Digest, your essential 10-minute audio recap for staying informed on London's property market. Let's jump right in. Today we're dissecting buy-to-let investments in the UK, a comprehensive guide for first-time investors in 2025, zeroing in on its take on Manchester and Birmingham.
Sounds fascinating.
Now, I know many of our listeners are familiar with buy-to-let basics, but this guide throws a spotlight on those two cities. Why are Manchester and Birmingham considered hotspots right now? Are they giving London a run for its money?
It's not about replacing London, but rather recognizing that different cities offer different opportunities. Both Manchester and Birmingham are experiencing a surge in what we call rental yield. We're talking up to 6.1% in Manchester, and even higher in Birmingham. To put that in perspective, you'd be hard-pressed to find those kinds of returns from a typical savings account.
That's a significant difference. What's driving these impressive yields? Is it simply a matter of supply and demand?
It's more nuanced than that. Manchester, for example, has seen explosive growth in its tech sector. It's now the second largest tech hub in the UK, boasting over 1,600 tech businesses, and a digital economy worth over £5 billion. This influx of tech companies and talent naturally drives up demand for housing, pushing up rental prices.
So Manchester's tech boom is fueling the rental market. What about Birmingham? What's attracting investors there?
Birmingham is undergoing a massive infrastructure overhaul. Projects like the HS2 high-speed rail line are making it a more attractive location for businesses and residents alike. This improved connectivity is expected to drive significant economic growth and consequently increase demand for rental properties.
So it's not just about trendy neighborhoods or a bustling nightlife. Infrastructure plays a key role in a city's investment potential.
Absolutely. And both cities are also seeing significant regeneration efforts, transforming former industrial areas into thriving residential and commercial hubs. This type of urban renewal often leads to significant property value appreciation, which is a major draw for buy-to-let investors.
Regeneration. It's a buzzword we hear a lot. But it's clearly more than just a facelift for a city. It has tangible effects on property values.
Exactly. Think of it as an investment in the future of a city.
Okay, so we've established that Manchester and Birmingham are attractive buy-to-let markets, with strong rental yields and promising growth potential. But let's talk about the elephant in the room, stamp duty. This tax can be a major hurdle for property buyers, especially those venturing into buy-to-let for the first time.
You're right. Stamp duty is a significant factor to consider. For buy-to-let properties, there's a 3% surcharge on top of the standard rates, which can add up to a hefty sum.
A surcharge? So on top of the usual stamp duty, I have to pay even more just because I'm renting the property out. That seems like a penalty for landlords.
It can feel that way. However, there's a silver lining for first-time buyers, specifically looking at buy-to-let.
A loophole for first-time landlords. Tell me more.
This guide highlights this as a significant advantage. First-time buyers purchasing to let, and not to live in, are exempt from that 3% surcharge. You'll still pay stamp duty, but at the standard rates, not the higher buy-to-let rates.
That's a game changer for someone starting out in buy-to-let. So we've got stamp duty demystified. But what about financing? Do mortgages for buy-to-let properties differ from traditional mortgages?
There are some key distinctions. For buy-to-let mortgages, you'll typically need a higher deposit, usually around 25%, and lenders tend to view buy-to-let as a slightly riskier investment, so interest rates can be a bit higher.
Higher deposit, potentially higher interest rates, making a note of that. Now, this guide also mentions an affordability assessment. What exactly are lenders scrutinizing when they assess my buy-to-let mortgage application?
They're primarily focused on ensuring the investment is viable. They'll delve into the potential rental income you can generate and ensure it can comfortably cover your mortgage payments, usually requiring it to cover 145% of those monthly payments.
So it's not just about my income, but also about the property's potential income. That makes sense. Ensuring I can cover costs and still make a profit. Are there any other expenses beyond the mortgage that first-time landlords need to be aware of?
There are indeed. Being a landlord comes with ongoing costs. Legal fees, property maintenance, insurance, and of course, property taxes. It's crucial to factor these into your calculations to get a realistic picture of your potential return on investment.
Right, those additional costs are important to keep in mind.
Absolutely.
Let's circle back to Manchester and Birmingham. We've talked about their overall appeal. But what makes these cities stand out in terms of long-term growth potential? Are they both equally promising?
They each have their own strengths. Manchester, with its tech and media boom, is attracting a younger demographic, driving demand for rental properties. It's being compared to Silicon Valley in its innovative spirit and growth trajectory.
So lots of innovation, lots of growth, lots of people needing places to live. Sounds like a recipe for a booming rental market.
Yep.
And what's Birmingham's unique selling point?
Birmingham is undergoing a massive infrastructure overhaul, with projects like HS2 improving its connectivity, it's attracting businesses and residents, leading to significant economic growth. This makes Birmingham a strong contender for both rental income and long-term property value appreciation.
So both cities offer promising opportunities for buy-to-let investors, but with different strengths. Manchester is attracting young professionals with its booming tech sector, while Birmingham is undergoing a transformation thanks to infrastructure improvements.
Exactly. And this guide suggests that both cities offer promising opportunities for both rental income and long-term value growth.
This deep dive has provided a great overview of the buy-to-let landscape in Manchester and Birmingham. We've covered a lot of ground, from rental yields to stamp duty to the unique strengths of each city.
It's been a fascinating discussion.
But there's still so much more to explore. We'll delve deeper into the specifics of these markets in our next segment. Stay tuned. Welcome back to our deep dive into the UK's buy-to-let market. Last time we established that Manchester and Birmingham are hotbeds for buy-to-let, but let's get granular. If I'm a first-time investor, where exactly in these cities should I be looking?
That's the key question, isn't it? It all boils down to your investment strategy. Are you after immediate cash flow with high rental yields? Or are you playing the long game for capital appreciation? Each city has neighborhoods that excel in different areas.
Okay, so let's say I'm chasing those attractive rental yields. Where in Manchester should I focus my search?
Areas like Salford Quays and Media City, UK are magnets for young professionals. Working in those booming tech and media industries we discussed, think modern, well-connected, vibrant lifestyle. That translates into high demand for rentals, leading to those competitive yields.
Salford Quays, Media City, UK. Noted. But what if I'm thinking more long-term? Where's the smart money going for capital growth in Manchester?
Look for areas undergoing significant regeneration. Places like Ancoats and New Islington have seen incredible transformations. They've gone from somewhat neglected industrial areas to trendy, sought-after neighborhoods, with stylish apartments and a thriving social scene.
So it's about identifying those up-and-coming areas before they hit the mainstream. A bit of a calculated risk,
Yeah,
but potentially big rewards.
exactly. You're banking on an area's potential to increase in value over time. It's a different strategy than chasing high yields, but the payoff can be substantial if you choose wisely.
High risk, high reward. Okay, so we've covered Manchester. What about Birmingham? Where should I be looking in this bustling Midlands metropolis?
Birmingham City Center is a strong contender for both rental yields and capital growth. It's a fascinating mix of historic charm and modern developments, plus excellent transport links. The jewelry quarter in particular is popular with young professionals and offers attractive investment opportunities.
Jewelry quarter. Sounds intriguing. I'm picturing stylish apartments, a vibrant social scene, maybe even a few hidden gem shops. Am I on the right track?
You're getting the picture. It's got a unique vibe that attracts both residents and tourists, which keeps those rental yields healthy and property values on the rise.
Okay, so the city center jewelry quarter. Check. But what about those areas primed for long-term growth in Birmingham? Where should I look if I'm in it for the long haul?
Keep an eye on Digbeth. It's a former industrial district that's rapidly evolving into a creative hub. Independent shops, art studios, music venues. It has that edgy cool factor that attracts a young, creative crowd.
So it's like Birmingham's answer to Shoreditch in London. A bit of a frontier spirit, but brimming with potential.
You've got it. It's a bit of a gamble. But if you're looking for an area that's poised for significant appreciation in the coming years, Digbeth is worth considering.
Okay, I've got my short list of neighborhoods to explore. Salford Quays, Media City, UK, Ancoats, New Islington in Manchester, and in Birmingham, the city centre jewelry quarter and Digbeth. But before I start browsing property listings, what else should I be thinking about when choosing a specific property?
Consider the type of property that will appeal to your target tenant. Are you aiming for students, young professionals, or families? Each demographic has different needs and preferences.
Right. A student might be happy with a studio flat near a university, while a family needs a spacious house with a garden in a quieter neighborhood. It's about matching the property to the demand.
Precisely. And don't underestimate the importance of transport links, local amenities, and the overall condition of the property. These all play a role in attracting and retaining tenants, which ultimately impacts your rental income and the success of your investment.
So it's not just about location, location, location. It's about the property itself and what it offers potential tenants.
Exactly. It's about finding the sweet spot, a desirable location, a well-maintained property, and a target market willing to pay for what you're offering.
Okay, I've narrowed down my search, found the perfect property, secured a mortgage, and I'm ready to become a landlord. What now? What about managing the property? Is it as simple as collecting rent and calling a plumber when something breaks?
The realities of being a landlord. It's definitely more than just collecting rent checks. You'll need to handle things like tenant screening, drawing up contracts, dealing with maintenance issues, and staying compliant with all legal requirements.
Whoa, that sounds like a lot. Is it even worth the hassle?
It can be incredibly rewarding, both financially and personally, but it's definitely not for the faint of heart. Being a successful landlord requires time, effort, and a healthy dose of patience.
So it's a commitment, not just a quick way to make a buck.
Exactly. But the good news is you don't have to go it alone. There are plenty of resources available to landlords, from online forums and landlord associations to property management companies.
Property management companies. Interesting. So I could essentially outsource the whole landlord thing if I wanted to.
You could. They can handle everything from finding tenants and collecting rent to dealing with those late-night maintenance emergencies. It's a great option if you're short on time or simply prefer a hands-off approach.
That's good to know. It sounds like there's a lot to consider when it comes to being a landlord. This deep dive has given me a much clearer picture of the buy-to-let landscape, especially in Manchester and Birmingham.
I'm glad to hear that. Remember, knowledge is power when it comes to property investment.
Well said. We've covered a lot of ground today, but there's still more to explore. Join us for the final part of our deep dive, where we'll delve into the legal aspects of buy-to-let, the ins and outs of property financing, and some essential tips for success.
I'm looking forward to it.
Welcome back to London Property Digest. It's time for the final part of our deep dive into the UK's buy-to-let market. We've explored the appeal of Manchester and Birmingham, zeroed in on promising neighborhoods, and even touched on the joys and challenges of being a landlord. But there's one crucial aspect we haven't covered yet, the legal side of things.
Definitely an important one.
I have to admit, the word legal often makes my eyes glaze over, but I know it's essential to get this right. Where do we even begin? What are the key legal considerations for buy-to-let investors?
You're right. Navigating the legal landscape is crucial. First and foremost, your property must meet all safety standards required for rental properties.
Okay.
This includes things like gas safety certificates, electrical inspections, and fire safety measures. It's about ensuring your tenants' well-being and protecting yourself from potential liability.
Safety first, absolutely.
Yeah.
It's not just about ticking boxes. It's about providing a safe and comfortable environment for your tenants. What about the legal agreements involved in renting out a property?
That's where tenancy agreements come in. You need a legally sound contract that clearly outlines the terms of the tenancy. This covers everything from rent payments and deposit protection to the responsibilities of both the landlord and the tenant. It's all about clarity and transparency to avoid any misunderstandings or disputes down the line.
So a well-drafted tenancy agreement is crucial.
Yeah.
Are there any other legal areas that landlords need to be particularly aware of?
There are laws governing various aspects of the landlord-tenant relationship, such as eviction procedures, rent increases, and handling disputes. It's essential to familiarize yourself with these regulations to ensure you're acting within the law and protecting your rights as a landlord.
It sounds like there's a lot to keep track of. Are there resources available to help landlords navigate these legal complexities?
Absolutely. There are government websites, legal advice services, and landlord associations that provide valuable guidance and support on all aspects of property letting. Don't hesitate to tap into these resources. They can save you a lot of headaches down the line.
That's reassuring to know. Okay, so we've covered the legal essentials. Now let's shift gears and talk about financing. We touched on mortgages earlier, but what are the key financial considerations for buy-to-let investors?
Remember, buy-to-let mortgages often require a larger deposit than residential mortgages.
Right.
Typically around 25%. You'll also need to factor in upfront costs like stamp duty, legal fees, and valuation costs.
Right, those upfront costs can add up quickly.
Indeed. And don't forget the ongoing costs of owning and managing a rental property, mortgage repayments, property maintenance, insurance premiums, and potentially letting agent fees if you choose to use one.
So it's not just about the initial investment. It's about having a clear financial plan to cover those ongoing expenses.
Precisely. You need to ensure your rental income can cover all your costs and still generate a healthy profit margin.
That's the ultimate goal, isn't it? To make a return on your investment.
Absolutely. Careful planning and budgeting are crucial for success in buy-to-let. It's about making informed financial decisions to maximize your returns.
Okay, so we've tackled the legal and financial aspects of buy-to-let. Any final tips for navigating the day-to-day realities of being a landlord? What does it take to be successful in this business?
Treat your property as a business.
Okay.
Be professional, responsive, and fair in your dealings with tenants. Building a positive landlord-tenant relationship is key to a smooth and successful investment journey.
So it's about more than just collecting rent. It's about fostering a good relationship with your tenants. Makes sense. Any other golden nuggets of wisdom to share?
Keep your property well maintained. It not only keeps your tenants happy, but also helps prevent costly repairs down the road. And stay informed about market trends, rental yields, and any changes in legislation. Knowledge is power, especially in the dynamic world of property investment.
Excellent advice. This deep dive has been incredibly insightful. I feel much more equipped to navigate the world of buy-to-let armed with this knowledge.
I'm glad to hear that. Remember, investing in property can be a fantastic way to build wealth, but it's essential to go in with your eyes wide open. Do your research plan carefully, and don't be afraid to seek expert advice.
Well said. And on that note, we've reached the end of our buy-to-let deep dive. We've explored the ins and outs of this investment strategy, from the allure of Manchester and Birmingham to the legal and financial considerations, and even some practical tips for success.
It's been a pleasure sharing my insights.
A big thank you to our expert for sharing their valuable insights, and to our listeners. Thank you for joining us on this journey into the world of UK property investment. Subscribe to London Property Digest for the latest updates on the London property market. Until next time, happy investing.